Bitcoin is under further pressure this weekend. We have seen the price drop below 82,500. I believe it went as low as 82,000 earlier on today. And this is what we've been expecting. We've been expecting Bitcoin to see lower prices going into the start of April. Obviously, there's a big event on the 2nd of April, which is going to be the announcement of the US tariffs. President Trump's going to be announcing more details of those on the 2nd, and we've also seen the stock market start to come down. So, what I really want to do is just make the case for and also against investing in crypto right now, because look, I think we're in a quite a precarious position in the crypto markets here, where I actually think we are at close to the point of maximum financial risk if you are a long-term investor. That means I don't personally see the investment case for putting in large amounts of capital right now today into the cryptocurrency space. This is in complete contrast with what thousands, I'd say 95 to 99% of other content creators within crypto are telling you right now, that are trying to make you think that this is just a bump in the road. This is just a temporary dip in prices before much, much higher prices over the course of the next year, certainly into the end of this year. And I'm actually seeing a lot more warning signs. And what I really want to do is just present those warning signs to you in this video so you can come to a logical and a rational decision as to what to do. Obviously, none of this is financial advice. I'm purely putting this content out for entertainment purposes and showing you what I'm currently thinking based on my experience. I've been a trader for 17 years. I've traded many, many different markets since 2018. I got involved in cryptocurrency. So we're sort of going all the way back to this period here after the 2017 top. I then started to get involved in this bear market, started to accumulate some cryptos, and obviously I've done fairly well since, certainly from Bitcoin. But right now, this is a place I'm looking to de-risk, and I'm expecting one of these sort of longer corrections going into the middle of 2026. So let's get into it. And if I actually sort of draw your attention to this tweet here, because I think this is really, really good. This is a chap called Tony the Bull on Twitter. Tony the Bull BTC is his handle, so credit to him for this chart. But it's just very, very simplistic. Here we've got the peak point of maximum financial risk at the top of these arches, and towards the bottom we've got the trough, which is the point of maximum financial opportunity. If we actually look at the Wall Street cheat sheet, we will see we've got a similar graphic here, which is the simplified market cycle, where you've got the peak point of maximum financial risk and then the trough point of maximum financial opportunity. So obviously those are illustrated here in terms of these arches. And this is just a really, really simplified outlook to have on this market. But you can see here, after we've actually been through these red bars, these red zones on the price, you can see it hasn't always happened right away, but over the following few months, we then put in a major cycle high, and we've seen price then come down for a period of at least a year. That's happened once, that's happened twice, that's happened on 3 occasions, really all the way down until we get to this point of maximum financial opportunity, or this trough. So we'd next be expecting our next point of maximum financial opportunity to actually come in the middle of next year, which is 2026. So, potentially that gives us a window of it could be several months to actually buy at low prices, and this is what I'm really waiting for now. I've taken a lot of my own cash and capital out this market, and I'm looking for the prices to come down. What we also can see here is this RSI divergence as well, and you can see we're actually making consecutive lower highs on the RSI. We're not able to push back up to such high prices, and in the past, when we've actually lost this sort of bullish control zone. If we when we've actually gone below this 70 reading, obviously right now we are down at 59 reading, so we've crossed below this moving average. In the past, when we've crossed below this moving average, this RSI based MA, you can see we've then the top has been put in, and we then come down to much lower prices. It's happened on this occasion. It's happened on this occasion. It's happened on this occasion, and it looks like potentially it could have just happened again. It looks like history is most likely going to maybe not repeat, but certainly rhyme. And I would not be surprised if we are now in a bear market. And of course, nobody's going to tell you this. This is a very, very unpopular opinion, unpopular take. And it's quite interesting because a lot of the bullish people out there kind of say, well, everybody's so bearish. Actually, people are starting to get warmer to the idea that we could be in a bear market, but there's still a lot of hostility, there's a lot of denial, and there's a lot of complacency in the markets right now. And that really brings us back to this Wall Street cheat sheet, this psychology of a market cycle, where just ignore these annotations. These I couldn't actually find a clean chart in high quality. This is the best one I could get. But if you look at where we've been, if we just go back to TradingView and actually look at the Bitcoin chart, you can see here it's pretty clear the path that we usually follow. After we see these sort of big run-ups in price, then you tend to see this sort of market cycle play out, and you get some sort of initial sell-off, and then you get some sort of complacency bounce, and then you get further sell-off, and you go through the whole sort of denial, and then eventually you go through sort of, I think it's the panic and fear, anger, etc. So let's just see, we've got the complacency. So I honestly think we are at complacency right now. I just see so much complacency. If we're not at complacency yet, then I really don't know where we are. But it's really, really feeling like we're at complacency, and we're about to go into anxiety. And I think this will be the next stage. I think people are starting to get, and I'm seeing a bit of anxiety starting to come into the market now. So if we kind of say we're in complacency here, I think potentially we are starting to go into the anxiety stage, which would have been, this could have been complacency. It would have been anxiety in here when we came back down sort of close to these lows and broke this low. I think this would have been anxiety. And then, of course, from there, we start to get denial. People are saying like, this it can't be over. I think we're starting to see a bit of denial even now, with people saying like this just can't be the top. It's impossible that we've topped. We have to top later on in the year. And obviously, this is what gets people to hold their bags and not to sell when they should be selling, because there's always that glimmer of hope as to the markets could be about to rip higher. But of course, bear markets fall down the slope of hope, and that is what we've seen happen time and time and time again. And even some really respected content creators, I've been quite surprised by just how much in denial they are, how complacent they are throughout these last couple of months, where they're thinking just miraculously everything's going to go a lot higher. I don't see it happening myself, and I think what you'll really start to see is more denial setting in as we come back down to these prices, and potentially we get a decent bounce from here, and that'll obviously give people the hope again. And bulls, I think, will then start to get almost quite. I'm expecting bulls to get quite aggressive on this bounce. I think they'll start ridiculing bears and saying, look, good luck if you sold below 70K or low 70Ks. Like, you got shaken out, you fools, and we're going to much, much higher prices, told you so, and all this sort of thing. I'm expecting we do come down and we get a bounce. Maybe we don't go that low, maybe we come down to kind of like the mid 70s, but I do think we get some sort of bounce in the mid to low 70s, and I think that gives the bulls some sort of renewed confidence that actually they are right, and they start to add back into the market, only for us then to see. So I think that kind of ties in with this denial stage. I think we're in anxiety right now. I think the denial will come when we get that bounce, which may well happen over the next month after the tariffs get announced. I think a lot of people will be positioned short. A lot of people that wanted to sell would have sold, and there may well be some sort of complacency bounce, but I think that will be in the denial stage. Then we move into panic as that low gets taken out. So that would kind of be here. So I think we can sort of linger between sort of complacency and denial for some time, and then this is when the real panic I think will start. And then we take that larger leg down, and then we will see the full capitulation, anger, and depression. So that's likely to be sort of this period here where we see, sort of like a full capitulation, and then people are getting angry on the next leg down, and then people are just getting completely depressed for a good few months until the market can start to pick back up again. And maybe that doesn't happen until 2027. And if we look at what happened in the past, in the last bear market, we can see something very, very similar. A lot of complacency, a lot of denial, and then, of course, this happened, and there was panic, and there was capitulation, and then people were angry in here. Why did they buy? This was a mistake. How can the markets do this? These markets are stupid, and then it's just a complete sort of depression stage after that final leg down, where people are just completely giving up all hope, and they're just walking away, exiting the markets right at the lows, and that is the time that obviously we'll be looking to step in and actually take long-term positions for the next 2 to 3 years. So I think all of that is to come. I know it's quite hard to grasp this concept, especially if you hold crypto, especially if you're following big crypto accounts and big crypto influencers that are very much convincing you that actually we're somewhere over here, and this is just, this is just a cool off, a cool off before the next rally. It's even in here, but they're trying to convince you that we've still got euphoria to go. We've still got belief in thrill to go. For me, peak euphoria was here. Peak euphoria was a sitting US president launching his own crypto token. The family, obviously Eric Trump, the family of the Trumps launching their own DeFi project. The Bitcoin Strategic Reserve being signed, and the USA holding Bitcoin on its balance sheet. The spot ETFs being the most successful ETFs ever. There was lots and lots of narratives that drove us up to this point, and it doesn't get any bigger than that. And for this reason, I think the top is in likely for a few years on crypto, and the data would suggest that as well. I mean, if we look at this one here, this data here is the volume data when it wants to load up. So we'll just give it a minute or two just to load. And I mean, I know what this chart shows because I'm just looking at this chart, but it shows that there is just no large spot interest in the market at all. There's no big demand coming into the market, and there we go. So you can see really ever since late November, well, we were still trending up until December time, until early December time. And it was really since then, I think it was really after the FOMC meeting and Jerome Powell obviously lowballing the market in terms of rate cut expectations over over the next year, over 2025, that was really the turning point almost for the volume in crypto. It's like interest really started to decline then, when I think the market understood that we weren't going to be getting massive rate cuts anytime soon, or QE anytime soon. And then obviously we saw some interest still within February. Stock markets topped out early February, based on the concerns around uncertainty and the tariffs, and obviously the Fed, Jerome Powell remaining hawkish, inflation coming in hotter than expected on a couple of occasions. And yeah, since then, we've just been going down because I think, well, I just don't think there's the demand interest in Bitcoin right here. Obviously, all of this was ETFs, it was Michael Saylor buying, and a lot of that demand has started to dry up. Michael Saylor seems to be getting lower on dry powder in terms of buying, and there we go. So yeah, things are looking fairly bleak. And like I say, just to really emphasize the fact that I feel we are in a complacency or a denial environment. I mean, this for me is a really good example of complacency. And this is also why I think we might still be here. We might not even be at anxiety or denial yet, or we might be between complacency and anxiety. Because I mean, virtual bacon, he's very well expected. I'm not trying to sort of hate or diss anybody or sort of lay into anybody or disrespect anybody, but I'm just giving an example here. So he's come out. This was only 3 days ago. I just sold over half of my crypto portfolio. This isn't a top call. I'm still bullish for 2025. So even though he's saying sold half of his crypto, it's saying he's still bullish for 2025. Okay, that's quite strange. Why would he sell half your portfolio and still be bullish? Then the Fed dragging its feet on QE and liquidity still tightening. The next few months will be dangerous. I agree. The next few months will be dangerous. Here's what I'm holding and why. So he basically gets into this and he says he sold 24 of the 36 altcoins in his portfolio and consolidated into stronger long-term plays. So actually, he hasn't sold for stables. He's actually sold crypto to crypto. So he's still exposed. He's still fully exposed. And if we come down, we can actually see his portfolio here. So he's 30% BTC, 25% ETH, 28% Sol. He's got 4% stables, and then he's got a small amount in a bunch of other tokens within these different narratives, these different sectors. Okay. So literally, he is 96% fully invested in the market right now. This doesn't, seem to be like he's taking his concerns very seriously when he says, the Fed is dragging its feet on QE and liquidity is still tightening. The next few months will be dangerous. I mean, if it's dangerous, why are you still 96% exposed in the market? And obviously, a lot of people will look at this and say, well, this sounds completely rational. This sounds completely logical. I'm going to follow what this guy's doing because clearly he's got his eye on the ball. But actually, if you follow what this guy's doing, your portfolio is getting absolutely destroyed right now. So for me, I think the last few weeks have been a real wake-up call for me as somebody that is involved in the crypto space, that is a crypto trader, to kind of say, what the hell's going on here? How is everybody that I'm listening to, or every tweet I'm seeing, or every influencer that I've ever followed or watched over the last couple of years, why are they all still bullish? Why are they all still positioned 100% for upside and don't seem to be de-risking? Like, are these people just sort of incapable of actually selling their investments, of holding stable coins, of going to cash? Are they just bad investors, bad traders? I think the issue for me is that the information that is being shared is kind of okay. It's going to be dangerous, but hang on a minute. Don't worry about it. Stay fully invested because it's going to turn around quickly, and you don't want to miss out when things turn around. That kind of seems to be the general theme of the majority of crypto creators, content creators, influencers, is that it's not going to be that bad. Just stick it out. Just weather the storm for a few months. It's going to get a little bit bumpy, but if you're in solid investments, if you're in, stable, good cryptos, good technology, good projects, actually those will do well over the rest of this year. We're still bullish for this year, but all of the data is telling me there's just red flags and warning signs all over the place. And obviously, I have a responsibility to my followers to present that information to you. Like, I really feel like that is my duty in the position I am, having the experience I have, having a platform like this, is actually to protect people from losing their money. So this was a concern to me. Um, and then you've got other, I mean, these are big crypto accounts. These are big personalities within the crypto space. Obviously, virtual banking. You've got this other gentleman here who is crypto. I think it's Crypto Michael. If it wants to actually load, then I can tell you. So you got Michael van der Pop or van der Poppe here, and it's very similar. It's very similar if we look at some of the sort of tweets. The altcoin market capitalization is still in the dip buying area, so obviously he's encouraging people to buy the dip. Gold is rallying due to the uncertainty surrounding the tariffs from Trump. Okay, I assume this will rotate in the next 1 to 2 weeks. Uncertainty's over. Perhaps labour markets becoming weaker. Buy the rumor, sell the news type of event. So he's basically saying that gold has been rallying, and actually, in the 1 to 2 weeks, this capital will start to rotate. So I would assume what he's implying is that it's going to come out of gold and into stocks and cryptos. And the reason for this, he says, that the uncertainty of the tariffs will be out the way. So he's very much, I don't think he's even fully grasping the effects of these tariffs. He's just trying to say this is complete FUD, this is complete fear that is being pushed out over the media to get you shaken out of your bags, and actually we're about to take off aggressively over the next 1 to 2 weeks. I can't I just can't agree with him. Um, massive amount of uncertainty. Here we go. The classical sell the rumor, buy the news type of event. Institutions are massively buying Bitcoin. If you can survive this period, you can withstand any bear market. Well, I think the bear market gets a lot worse. I think things go a lot lower. So this is, in my opinion, very, very sort of reckless and uh, what's the word I'm looking for? It's just poor. It's just poor analysis. It's not good advice for people. Um, Downtrend momentum, trend is still higher lows. Sorry, lower highs and lower lows. Okay, so he's talking about a low test. So that tweet I actually agree with, but you know, you can see the general mood, the general theme is it's really not that bad, and it's going to be a buy the rumor, sell the news. I think this might be the tweet I was looking for. Um, in that sense, we could likely see a case that the heaviest impact of the tariffs is getting weaker, likelihood of QE and lower yields, which is what Trump wants. Da, da, da. Okay, so he's talking about the gold all-time highs as well. So yeah, he's really thinking that things go high. I've replied here, you're missing the point. In the 2020 bear market, stocks us over 2 years to regain their highs. Tariffs won't be priced in within a few weeks. So I'm basically trying to challenge this guy. He hasn't responded to me yet. But yeah, it's pretty concerning what I'm trying to say. And like I say, there is just so much complacency in the markets. There's a lot of people that thinking that this is going to be something short, that things are going to be over quickly. They're still bullish for 2025. And like I say, I would say both of the accounts I've just shared are definitely not the up only Moonboy accounts. These are more balanced accounts that are clearly, seeing these warning signs as well, seeing these red flags. Both accounts have acknowledged there are some dangers in the market here. But the advice is, well, just stay all in, stay fully positioned. Max your portfolio out, take advantage of these discounts. And I can tell you here that this is absolutely, in my opinion, one of the worst things to do, because what we are seeing is we're seeing a full structural breakdown of the stock market, losing uptrends, losing key weekly moving averages. And like I say, I did this on the video yesterday, this path here, but I'm thinking we could see a long, long period of consolidation for the stock market, and potential downside. And possibly we're not going to see new all-time highs again until late 2026, in which case this is going to be very, very bumpy. And of course, we could see some major, major rallies here. We can absolutely see things, get very, very choppy and very, very volatile and very, very difficult to trade. But I'm still thinking that we get lower prices on the S&P. Like I say, right now I'm looking at potentially another sort of 8% downside. Maximum downside would be down to this level. Losing 5,000, I think would really, really trigger some panic. And that would be a further 13% as I have as my sort of worst case scenario to the downside. And in total, that would put us into the bear market, officially into a bear market on the stock market, and would be about a 21% decline. And obviously, this moving average would be coming up. We'd likely retest with this 200-week moving average. And look, we'd be retesting potentially this 200-week moving average this year, 2025. The last time we tested this was all the way back in 2022, so 3 years ago. Before 2022, we retested this in 2020, so 2 years earlier. We retested it in 2018, so 2 years earlier than that. So, before that is 2016. So it's pretty much every more or less 2 years. So it's now been over 2 years since we last tested the 200-week. And it would be absolutely, absolutely natural for us to do this, especially considering the policy changes where the current government is looking to make spending cuts, and we've got interest rates at a restrictive level, and the Fed is in no hurry to cut these rates. And I think, for us to do something where this is just a very sharp V reversal recovery, we need to see big rate cuts happening from the next FOMC meeting. And everything we're being told right now from the Federal Reserve, from Chairman Powell, is that these rate cuts are going to be done very, very slowly over the course of the next year. We might get 2 rate cuts, we might get 3 rate cuts. That isn't probably going to make a difference to the direction of the markets in the short term. And like I say, if we're going lower now and we're weak now, I expect there to be further downside, further chop over the next, certainly over the next year, over the next 12 months. I mean, like I say, potentially a bottom comes within the next year, I think, for the stock market. Bear markets don't last forever. So, yeah, I mean, there will be really good buying opportunities, but do you want to be all in the markets here, or would you rather have some cash on the sideline? And just going back to Bitcoin, it's a very, very, very similar thing. I mean, potentially, worst case scenario, I'm thinking we could come down as low as 30,000. I'm not saying that has to happen, but I'm saying as a worst case scenario, it could happen. That would be well over a 50% drop from current prices. Even if we got down to 40,000, that would be over a 50% drop from current prices. Do you really want to hold your entire crypto portfolio through a 50% drop, or do you actually want to be getting out here and having some cash on the sideline to buy if and when we do come to those lower prices? I know how I'm positioning. I know that I'm fully out the market. I know that I've been fully out this market since early last month when I made a video about going fully to cash and telling people I was getting out. And of course, up until that point, I was bullish. I was thinking we could make another leg higher. But obviously, this breakdown through this trend line is what really, really got me out the market. And yeah, I just want to tell anybody that's watching this video that either is thinking about investing in crypto. Obviously, if you're watching me, it means you probably already have a crypto investment. Probably you might have large crypto investments. Just be really careful here. Just accept the risk. I'm not telling you what to do. If you want to go and listen to other people and make opinions based off different information from different places, which I recommend you should do, then feel free to go ahead and do that. It's not going to offend me. But of course, I'm just trying to basically address and present these red flags and these warning signs as I'm seeing them, which is what I believe I should be doing as somebody with a responsibility that has a following, albeit a small following. I have a following, and it is my duty to my following to obviously, make them aware of these risks and just make sure that they're protecting their capital and not going to get into sort of too much trouble over the next year if this does play out. So I'm going to leave it there. Hopefully you've appreciated this video. If you have done, please do smash the like. If you like this content and you're not yet subscribed, or if you're new to the channel, please do subscribe so you make sure you don't miss out on future videos like this. And like I say, there's big plans to come. Discord group is going to be set up soon. Lots of alpha is going to get shared there. I'm going to be probably putting together some sort of course when it comes to what I'm looking at and some of the things I use and indicators, so you can at least get some basic education on how to profit from these markets over the long term as a longer term trader and investor, which is ultimately what I am. Obviously, I try and swing trade and play short-term swings, especially when things are volatile like this. I do have some short positions on here, but of course, that's really just to hedge longer-term spot positions, some Bitcoin spot positions, which I'm still holding from way sort of lower prices. So obviously, there's going to be lots of value and alpha to come from the channel over the next few weeks, months. So yes, hopefully that all sounds good, and hopefully I'll see you here again. And until the next one, have a wonderful rest of your weekend, and I'll talk to you all again soon. Bye for now.